Disney's in there with a $38 bid for the acquired assets for Fox, and we think Comcast is putting together a better bid.
And what do you think what's the number? What's the number? Let's do it this way. What's the number at which this is too painful for everybody?
Yeah, I mean,
the winner becomes the loser.
Yeah, Comcast has already said that they're going to do an all-cash bid, so not use stock. I mean, our belief is the investment grade rating they have is key, is paramount to the company, and that, based on S&P, is about $45 for those assets. So it's a substantially higher bid. It's about 20%.
$45 per share in cash, all cash.
You got it.
Is that the high? After that, that's when you get upset.
I think I'd get upset even before that. I mean, I'm just saying that's the highest number. That's about a 17 times multiple on 2019 EBITDA. That's a big number.
But that's what preserves their investment grade credit rating. But shareholders could revolt before that.
I mean, I think they've revolted already. If you've seen Comcast shares, there's a lot of displeasure being,
So is Comcast doing this then because they're throwing in the towel on the, by and large, regional distribution model, and they're going all in on content?
I don't think so. I mean, we put out a note today about the cable fundamentals, and they're very strong. Actually, we increased our broadband estimates. So the growth there we still think has a long way to go. But what it's seen, it's had a lot of success in media. It now sees itself as subscale compared to the likes of Netflix and Apple, and it wants to get bigger.
So Charter is over there looking at this and probably getting a little spooked. Hey, are we missing something? Does Charter have to go all in on content?
I don't think so. I mean, that is a pure play distribution company. It's a bit of a turnaround story now that it's digesting those Time Warner cable assets. We think you're going to see improving fundamentals there in the second half. But it's a pure play. Obviously Malone has a big say in what goes on there. He's got his content assets in Discovery and some others. Could he make a play for the RSNs inside the Fox assets?
Regional Sports Network.
You got it, regional sports networks. It's possible, but we think they're going to remain on the sidelines.
Do you remember how you felt when you heard that Amazon was buying Whole Foods?
Yeah.
Is it possible that some tech giant comes out and disrupts this whole thing and gives us that same kind of jaw-dropping feeling that they're going to do something really massive and transformational?
It's possible. All these companies are spending more and more on content. Amazon, Apple, and we don't really know what Apple's strategy is. Now, the rest of the media companies are seeing nice moves in their stocks based on the belief that some of these internet companies are going to come in and buy these media assets.
Fox assets, everyone keeps saying they're basically irreplaceable. They're the one kind of chunk of entertainment content assets you could buy right now. Is there a chance that, let's say Disney buys them and it doesn't really translate into direct-to-consumer success with some kind of an over-the-top offering? Is it still an okay deal based on the business we have right now?
That's a great question. You've seen these direct-to-consumer products take off, and you've seen Netflix hit new highs basically every week for the last 6 months. So there's a lot of focus. Disney has announced that they're pivoting their business to chase this direct-to-consumer opportunity, and they found a way to do it in an accretive way by buying Fox.
Who do you want to? Who needs this more?
Disney, no question.
Disney, no question, needs it more.
This is their main business. It's their only business. Is the content and media business.
And so
they need more of it.
By the way,
we need more of it to compete with these internet giants.
We talked about the price tag, which you thought you said $45 a share is when it gets to be a problem.
That's the most we believe Comcast can pay and maintain its investment grade rating.
Okay, what is the most that you believe Disney can pay?
So Disney's a little different. They have their offer is a mix of cash and stock.
Right.
So obviously they need the stock to perform, but and they also have quite a bit lower leverage than Disney or than Comcast, so they could pay quite a bit more.
Like what? Give me a number.
Well, we haven't said, and frankly I haven't done the math.
What's a number that's?
We don't think
what's your pain threshold?
It's getting painful already, but I mean I would say at 45 is the most Comcast can bid. We don't think Disney needs to match Comcast to win this because they have a more clear regulatory path.
Speaking of regulatory path, T-Mobile, Sprint, does it get approved?
I actually don't think it does get approved. I think the chances are less than 50-50. I think the FCC could approve it. I think Ajit Pai is a fairly forward-thinking guy. He's looking at the public interest, and 5G is going to be difficult for both Sprint and T-Mobile to build out on their own. The problem is the DOJ. Going from 4 to 3, that's a very high hurdle.
I think the problem could actually end up being the states. It could end up being California and New York.
Yeah. Can I just revert to you had a comment on the regulatory environment in terms of this Comcast bid. You think the Comcast bid has a harder regulatory hurdle to jump on? Is it the timing issue, or do you think you actually think that it could get blocked?
I think it's both. From a timing standpoint, Disney's further along. There's a story out last week that said that it could be approved in the next 2 to 3 weeks. That from a time value of money and from a risk standpoint, puts Disney in a better position. It means a higher premium is required from Comcast. But just if you look at the overlap of assets and the fact that you've got some combining distribution and content together, which was a problem for the DOJ with the AT&T Twix deal. Just because they won in court doesn't mean the DOJ has changed its mind on that. So there's a number of issues involved that make it more difficult.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.